Joining us now is Berkshire's chairman and CEO, Warren Buffett.
स्टॉक मार्केट रिलेटेड इंटरव्यू वीडियो पाने के लिए मेरे चैनल को सब्सक्राइब करें और बेल आइकन को दबा दें।
You know, usually that's an analogy that I understand and agree with, but this time around, a farm in particular, I would be pretty worried if I was a farmer trying to figure out if I should be planting soybeans or if I think I'm going to be able to make enough money to get things back this time around. Yeah. Tariffs have hit the farmers particularly hard, and a lot of them have said they're behind the president. They want to see us get to a better situation. But many of them are also in a position where, look, they've already been asked to give a lot. They thought we were about to reach a deal, and they're hoping that when they're making decisions for this planting season, they have some clarity.
Well, it is true that business generally has improved, markets have improved, and everything, and the farmer has not participated in that. So this has been a very good economy for a long time. I mean, we've been coming back for 8 or 9 years, and businesses kept getting better. Interest rates have been low for business. Stocks have gone up, and the farmer has not participated the same way. So maybe I shouldn't have used that example, but if you have a decent business, I mean, you buy into a business. You don't buy a stock that wiggles around, you know, and people understand that, but then they behave as if it's bad news when the price goes down. If you had a half interest in a wonderful business, and the person that owned the other half came in and they were depressed by these headlines today, and they said, I'll sell to you my share of the business a lot cheaper than yesterday because I think this whole thing is going to just end the world. You just say, here, I wish you weren't so depressed, but if you're selling it to me cheaper, you know, the business is going to be here 5 years from now and 10 years from now. And all the headlines, you don't know what the world's going to look like in 3 years or 5 years or 10 years. What you do know is that the United States is going to grow over time and that businesses are going to generally do well. And if you own decent businesses, you'll make money.
That's a great long-term perspective. But for the shorter term, not just for stock prices, even for companies that are trying to think about their quarterly earnings or trying to figure out how they're going to be able to pay for some items or figuring out how the relationship with the supplier is going to work at this point. It could be an impact that's fairly large in the short to medium term.
Our own subsidiaries, obviously, where they thought that tariffs could be increased, they've loaded up more on inventory. I mean, no, you make business decisions, but you don't make a decision about whether to buy or sell the business if you've got a good business. You've got to, if you're going to own a business for 10 years, you're going to see a lot of terrible headlines. You know, I bought into my first business in 1942, and you know, they didn't notice that I did. But just imagine all those headlines at that time, and the world, you know, the Philippines were falling. I mean, we were losing the war, and but the United States is going, your kids are going to live better than you did, and your grandchildren are going to live better than they do. And generally speaking, productive assets are going to be worth more in this country. And if you own a diversified group of productive assets, you'll do fine as long as you don't read the papers.
Although you did say an hour ago that the sell-off when the Dow was down by about 500 points was not an undue sell-off, was not overdone at that point if we actually get into raising tariffs by 25%.
Well, it may not be undue. I mean, in the day or the week, but you shouldn't be. I don't have the faintest idea how to buy and sell stocks for a day or a week or a month. I know how to buy businesses for a long period of time. I'll be wrong on some of them. You won't be wrong on America.
In terms of that, when you look at the markets today, if you see cheaper prices, would that mean that you would buy more of a stock that you might have bought last week?
Yeah, some of them will hit levels that I might have been below. I will always react well to declining prices. If I like to buy a business, you know, if I could buy this hotel we're in and they drop the price, is that good news or bad news for me? I mean, if I like to buy hotels. So, but the fundamental point, and some people get it and some don't, but when you are buying a stock, you're not buying something that wiggles around or is on a chart or has a target price. You're buying part of a business. If you're right about the business, you don't pay a crazy price. You can be right about the stock as long as you don't do dumb things yourself.
Over the weekend, a lot of questions came up about share buybacks.
Yeah.
People were asking specifically about Berkshire. Why don't you buy back more shares of Berkshire, especially when you have $110 billion in cash on hand? What's your answer to that?
Well, we will only buy Berkshire if we think that the shareholder the next day is, or that same day, is wealthier after we've bought the stock. In other words, we bought it for a shade less, or maybe a lot less, but at least a shade less than it's actually worth. And we don't set out to buy any given amount. We set out to buy stock at prices below intrinsic value per share. Now, intrinsic value per share is not something that is precise to the penny or anything. It's probably a band of 10% or something like that. And my partner, Charlie Munger, if you asked us to give you a slip of paper with intrinsic value per share on it, it would not be the same figure, but it'd be close. And we both would have a band or something of the sort. If you're buying it below that figure, you know, if we've each got $1 and you'll sell me, and we put it on the table and you can't reach it for a while, you say, well, I can't reach it, so I'll sell you my share for 95 cents. I'll give you 95 cents. You know, if you say $1 too, you know, so no dice. So it's not complicated. It may be beyond my ability to figure out the intrinsic value of certain kinds of businesses, but with Berkshire, I've got a reasonable idea, and I try to give the shareholders the same information that I regard as important in calculating that. Now, it can change. Presumably, you want it to change upward over time because we retain earnings and we should be building more value. But that's the equation. First of all, you have to have the cash you need to run the business. I mean, Steve Jobs called me one time. I mean, he called me, I don't know how many years ago, and he was thinking about repurchasing shares. And I said, Steve, there's just two questions. I said, you know, A, you have all the money that you need to develop the kind of business that you've got in your head for the next 5 or 10 years. And, he says, we got plenty of money. And then I said, then the second question is your stock selling for less than it's worth? And he said, it's selling for a lot less than it's worth. And I said, well, you've answered your own question. But if he'd answered, we need the money we've got here actually to fully develop our business, and we've got opportunities to do it, I'd say forget about it. You know, build the new plants and do that, and maybe the cash will come in later where you can buy in stock. And secondly, if he said the stock isn't really cheap, what's the reason for buying it in?
Did he buy back shares after that?
He didn't like buying back shares. I think he was hoping I was going to give him a different answer. He didn't argue with the logic of it, but I think maybe I think he was hoping for a different answer.
It's interesting that you say that because Tim Cook, the current CEO of Apple, was here this weekend, and we got the chance to ask him about share buybacks too, because share buybacks have been such a big deal for Apple. They've deployed so much cash doing that, and just announced last week at the earnings that they'd be buying back an additional $75 billion worth of Apple shares, or at least they've authorized the repurchase of that much. Again, we sat down with Tim Cook this weekend, and here's what he had to say about that too. Listen in, Warren.
This is a funny story a bit. Is back in 2012, I'd been in the CEO spot maybe a year or so. We had a growing amount of cash. I think we had crossed the 100 billion kind of mark, if my memory is correct. And I was getting lots of input from a lot of different people, as you can guess. And when I don't have experience in something, I always make a list of the people that I think are the smartest people that I can contact to talk to them and get advice. And Warren was on the top of the list. As you can imagine, I'd never met Warren before. And so I get his number, I call out to Omaha, and I'm thinking, I wasn't sure he'd take the call. You know, I'm sort of calling out of the blue. He doesn't know me from Adam. And but he took the call, and I had a great conversation with him, and that was the first time that I'd met Warren, and he was very clear to me. I still remember he goes, let me just cut through it. If you believe your stock is undervalued, you should buy your stock. And I thought that was just the simplest way of looking at it. So here's what we do, is we first and foremost take care of our people, and we take care of the company and the future of the company. And we've been investing a ton in both this country and some others. We're going to spend $350 billion in the United States in building new sites, and we just announced a new expansion in Austin and so forth. So all of that is number one, right? And then if we have money left over, we look to see what else we do.
Part of what else they do, he said, is to make acquisitions. And what I didn't realize is he said they're making an acquisition every week or two.
Yeah, they make a lot of small acquisitions.
He said they've made 20 to 30 acquisitions
Sure.
over the last 6 months, small acquisitions that they don't really talk about and don't tell people things about.
Yeah.
You knew that?
If you look at the 10Q, and you can see, but they make a lot of acquisitions. Yeah, and I hope Berkshire makes a lot of acquisitions. And I'd rather buy an attractive business than buy our own stock at its intrinsic business value. If our stock gets well below that, I've still got this strong, and I can do both, fortunately. But why? How an executive can say we're going to spend $10 billion buying stock and then not pay any attention to the price at which they buy it? They wouldn't buy any other business that way. And so we're price sensitive on it. On the other hand, when the price is right, there's no easier way to make money for your shareholders.
You say you like Apple buying back shares, so you think the price is right there.
Well, they've done a terrific job of it. They've done a terrific job. They've made their shareholders a lot wealthier because Tim has done that aggressively when the price was right.
How do you know in hindsight, how can you tell when a company's doing a bad job repurchasing? You have to be able to figure out how to value the business properly. It's easier than you're making it sound.
Yeah. The truth is, if you look back, and I was director of the company, but Coca-Cola kept repurchasing their shares at a time when it didn't make sense if you look at it in the years earlier. They had a terrifically good idea of repurchasing when the company only had a market value of in less than 10 billion, and they bought a lot of stock and they were aggressive about it. But they fell in love with the idea, and I was a director at the time, but they're one of many. I mean, the same thing happened at Gillette to a degree. It's interesting. Sometimes it's difficult for CEOs to be objective about their own stock price, and they think the higher it sells, the better. And it's a fine way to feel, except if you're repurchasing it and you repurchase it at prices up to the sky.
When Coca-Cola was buying back shares and it turned out it was at too high of a price and you were a director, did you know that at the time?
I had a pretty good idea.
Why didn't you say something?
Well, I may have made some comments, but the management had done a sensational job. I mean, that's one of the reasons it got so high. They'd done a terrific job. They made me a ton of money. If you belch too often at the dinner table, you don't get invited to parties anymore.
Which is the difficulty, I think, with probably any board.
You don't get to be a director if you're, unless maybe you're an activist or something, but people don't like it if you speak. And some CEOs like it a whole lot less than others. Some CEOs actually encourage a fair amount of dialogue, and others, make sure that all the important stuff comes up at 5 of 12 when you have to leave at 12 to catch your plane. And the next plane is 6 hours later.
That's interesting.
Boards are managed in different ways.
Have you known every board you've been on which has been managed well and which is not?
Well, some are managed well in some respects, and they can be dumb financially. I mean, you have some managements that really have a money sense, and then you've got others that they're very good managers, but they're not good at. I always love it when I hear a management, and I ask the guy what he's doing with his own money, and he says, "Oh, I couldn't possibly, evaluate stocks and everything. I turn that over to somebody else," and then he goes out and makes a $5 billion acquisition of something he doesn't really know anything about. We're just buying a whole lot of stock. Some are good at it, some aren't. That's true of our managers. We have terrific managers. Some of them are good at bolt-on acquisitions, and some of them would be terrible.
Do you let the ones who would be terrible at it go ahead and make a bolt-on acquisitions?
Not very often. Some of them don't have. They have great operational sense. They don't have a money sense exactly. A lot of you talk to a lot of managers, CEOs, and they don't want to run their own stock portfolio. Well, those are decisions, and those are capital allocation decisions, and they know a lot about businesses, and they know how to value things. You'd think they'd be good investors, but I had one fellow who was a big partner, and back when I was running a partnership a long time ago, and he had stock options at his places, and he would regularly exercise and take the money and buy Berkshire. Well, he actually wasn't so dumb, but it wasn't exactly what the options were supposed to incent.
But that's unique to have somebody who understands both operations and the money side of things.
Some really do, and
I'm thinking.
I would say Tim Cook, for example, does. He has a real grasp of. I mean, he has a operational mind, and he has a money mind as well.
What about Greg Abel and Ajit Jain?
I don't want to get going through the alphabet on this.
No, I ask it because Berkshire's in a unique position, and you have people who are doing all kinds of things. Some who are managing money, some who are managing operations.
Yeah.
Can somebody do all of it?
Both of those guys happen to have extreme money sense, but I don't want to get started going through the list.
Understood. Can't help but try.
Yeah, well, you got the answer for the two important ones.
Welcome back to Squawk Box. President Trump tweeting just minutes ago, the United States has been losing for many years, $600 to $800 billion a year on trade. With China, we lose $500 billion. Sorry, we're not going to be doing that anymore. Take a quick look at the futures. Continue to be down close to 500 points, 471 472. NASDAQ down 161. S&P down 50. I guess, Becky, if I were to pose a question to Warren, it would just be that those trade deficit numbers, you get bogged down in talking about whether they're good or bad or how to fix them. And it's a symptom of really it's a symptom more than a cause of what happens with China. I was just wondering, Warren, you've done great over the years with the status quo, with how the United States has approached China and China trade. Berkshire's done great. We've all done great. Everything's fine. Do you wish that Trump hadn't confronted China at all, and we just aren't addressing any of these long-term problems with intellectual property or, take your pick of which issue we're trying to solve, but you just wish he had left it alone and just let Berkshire do its business the way it's been doing, or do you think there's some rationale to confronting China?
China and the United States, for the next 100 years, I can tell you two facts about it. They'll be the two superpowers of the world, right, and we'll always have some tensions with them. And it can well be about intellectual property. It certainly has over the last 20 years or thereabouts, 30 years. And it will be about trade. It will be about policies that they're carrying out, in terms of their neighbors or we're doing. There's no way you can have two countries so dominant in the world without them having conflicts. You just don't, there are going to be tensions, there are going to be negotiations, and sometimes we'll both come away thinking we lost, but it's inevitable. So and how you play the game if you're negotiating with some people that are tough negotiators on the other side, it's not, those are not easy decisions to make. I mean, if you're doing with the labor union, nobody really wants to strike. It's bad for both sides, but sometimes things develop to that point. So I think you should get very used to the fact that if you're a young person, that you're going to see a lot of different tensions over time. And it will depend on the individuals involved. It will depend on the specifics of the situation. But every time we sit down, it won't be like a garden party.
Warren, you mentioned that there are going to be times where both sides walk away and feel like they lose. Are there times that both sides could walk away and feel like they win? Because that's usually the sign of a successful negotiation.
You want both sides to feel like they won at the end. And the idea of a negotiation is to take something that you have, the other person needs, and in a sense trade that for something that they have that you need. And it's going to be constant, and there's times when it's going to be tense. It's just the nature of things. I mean, you have that on a much different level when you're negotiating nuclear arms reductions or something of the sort. I mean, we know it's in the interest to get the nuclear stockpiles down and all of that, but that doesn't mean it's easy. And you try to come up with deals that are good for both sides, but that's not always easy.
I mean, I try and think about that in this scenario, and it may be particularly difficult in this scenario because for a long time we've been dealing with China as if they were still not a superpower, as if they were still. So we've been giving them better sides of deals. It's really hard to all of a sudden say we're taking some of that back. What do they get out of this deal when we are trying to change a negotiation that we think has been unfair to this point?
Well, it's difficult for us to accept the fact. It was difficult for us to accept the fact after World War II that the Soviet was a superpower in terms of military power, and there were, I mean, as you know, obviously, there are all kinds of tensions involved in that and negotiations, and it's still a worry that we have the two big nuclear stockpiles in the world, and you worry in terms of mistakes being made. I mean, it's a big game, and with China, it's overwhelmingly an economic game, and it's an economic game we didn't think we'd be in 40 or 50 years ago. I mean, the Chinese, the rise of their economy has been extraordinary, and they do some things we don't like in connection with that, and sometimes you have to get tough to make changes, and we do some things they don't like. But it's a reality now, and it's going to be a bigger reality as the years go by, and it's very easy for it to become a huge political issue. I mean, so you'll have people fanning the flames for their own personal interest in politics or their own interest in business, and it's not easy to navigate. But leadership that's the job of leadership, is to take on the tough problems.
Having said that, the economy has held up very well in the face of any tensions that we've seen to this point. Jobs report, incredibly strong on Friday. The last GDP report was very strong, too. So
you can't stop America. You can't stop China, though, either. But you can't stop America. I mean, we live as a country. You know, it's extraordinary what we have compared to 30 or 40 years ago. Even in agriculture, it makes it tough in agriculture because we get more productive all the time, and that tends to depress prices. But this country is going to move forward. I mean, there's no question about that. But China's going to move forward. And the way to try to do it is to do it that maximizes what both countries can do well, and more trade is better. But trade in specific industries can hurt specific industries here, and that's a huge problem. The heads of both countries have to be the educators in chief, and they have to explain why trade is good for the populace as a whole, and it can be terrible for people in certain industries. And then a rich country takes care of those people that become roadkill in the process of producing a better life for 330 million Americans.
Lots of people on Wall Street are not going to be as sanguine about this news today. I've been reading some reports last night. Goldman Sachs saying that this is not only rapidly increases the odds that we don't get a trade pact with China, but also increases the odds that you could see Trump announce that he's going to pull out of NAFTA, or that he's going to put auto tariffs on European imports. What do you think of that, and what would that mean?
It's the problem of escalation in anything. We have the problem of that with nuclear weapons. I mean, the escalation, and it gets more and more dangerous as people become feeling more and more threatened, and their own local political situation demands more and more action. I mean, that's the dynamic that you are facing anytime you get to these major problems between countries, and that requires the wisdom of the leaders, but to some extent it requires the wisdom of the people. I mean, and how the leaders convey it, people, and how they conduct themselves. But we will have this sort of thing happen. We've had it happen, obviously, and occasionally would turn into wars in the past. We can't do that anymore. In a nuclear world, you can't get to that point, and any sane person realizes it. But you don't want to get too close to that tinderbox.
USMCA, also better known as New NAFTA, that deal is out there, but now I think Pelosi is saying that they're not going to bring it for a vote at this point. Are you in favor of the new NAFTA deal?
Well, I was in favor of the original one. We are very, very lucky to have Canada and Mexico bordering us. I mean, and then oceans on the other side. I mean, it's geographically, it's a very attractive position compared to how countries are situated around the world, and we've got lots and lots and lots of common interests, and we are the big guy in the game, and as the big guy in the game, we should do more than our share of making sure that our neighbors are growing and prospering at a rate that's consistent with ours. Doesn't mean they're equal, but when we live better, they live better. And trade with Mexico and Canada is enormously important. We should treat them as neighbors and not adversaries.